Hello there, and welcome to the PPW Pod, bringing you news, views, and interviews from the world of real estate, online marketplaces, and PropTech industries. I am Harvey Hancock. I'll be your host today. As always, we are joined with Simon Baker. Simon, how are you doing?
5:30 in the morning for me. But I think it's
5:30. Oh wow, it's an early start
bright and
for you
early.
then.
But given Mike's at the other end of the world, I think we can accommodate him.
Fair enough. And today's special guest, Mike Plichta. How are you doing, my friend?
I'm good, thank you. It's a pleasure to be here. Thank you for the invitation.
Oh, my pleasure. I'm very much looking forward to today's conversation. But before we get into it, a little bit of admin. Simon, can you give us a quick update on the Barcelona conference? It's coming up in a couple of months now, and it's been a while since we did a quick plug for the show.
Sure. We've got, for those unaware, at about the 2nd, 3rd, and 4th of October this year, we're running our European Property Portal Watch Conference, or PPW Conference, PropTech and Portal Watch Conference. Our sign-ups are going fantastically well. We're well over 200 attending, way ahead of where we were last year. We've got, I think it's something like 35 different countries represented. We'll have got a great lineup of speakers that we're putting together. And the theme of the whole conference is all around AI and what it really means for both the PropTech and the property portal industry. So if you're interested in knowing what's happening, and more importantly, what's going to happen, and you want to understand what people are doing, then you've got to be there. So I'm looking forward to seeing everyone come to the conference 2nd, 3rd, 4th of October. And as we're going to chat with Michael a bit later on, we've got a startup day on the 1st, the day before, where we spend a complete day working with early stage businesses on everything from, as I say, soup to nuts, about what it takes to build one of these businesses, how to raise money, how to scale, and then probably most importantly, how to exit and make a good return on your investment.
Where can we find tickets, Simon?
Sure. If you want to get tickets, go to www.ppweurope24.com. That's ppweurope24.com. You'll find out all about the conference, register, and of course, the prices are going up shortly, so please register today.
Perfect. Excellent as always, Simon. It's that's a sales pitch you've got down pretty well over the years, I'm guessing, at this point.
Done it once or twice. Actually, 39 times.
39
It's our 39th conference, so you should definitely come along.
Perfect. Mike, you're our special guest today. Do you want to give people who maybe haven't met you or heard of you before a little bit of background on who you are, what you do, and what your relationship, most importantly, to the industry is?
Yes, thank you. It's a pleasure to be here. Welcome, everybody. My name is Mike Plichta, and I work with PropTech Farm. I'm managing partner for PropTech Farm Apex Fund, the fund we are raising and launching here in Southeast Asia and Australia. And we'll speak a bit more about it later, I hope. As for my background, I've got over 15 years of experience at intersection of startups, corporate and venture capital ecosystems. I started with Deloitte in financial consulting and advisory, but soon after I moved to the VC space because it allowed me to combine my passion for technology with the financial acumen. So I began by working with pre-seed stage companies in a pre-seed venture capital fund. And soon after, I joined a bit later stage, but still at early stage investment at pre-Series A and Series A funds. Those were initially sector agnostic funds, so investing across different areas of businesses and industries. But then I decided I want to specialize, and I joined a corporate VC, CVC of the largest energy company in Germany, Innogy, and their VC fund, Innogy Innovation Hub. So we worked across Europe, Middle East, UK, and the States, investing in energy tech and PropTech companies. As I'm sure our listeners are well aware, buildings are responsible for around 40% of energy consumption. So for such an energy and utility giant, the real estate sector was already at the core of its business interest. And I was working on supporting companies in growth, in business development, and establishing partnerships with corporate clients for our PropTech portfolio companies. And through this angle, I learned and connected with real estate companies, and decided to join the real estate sector itself by working and leading a PropTech advisory role in one of the top real estate consultancy and professional advisory company, Colliers, where I worked first in Europe and then moved to Singapore. So here started my journey with Southeast Asia. And with Colliers, I worked on implementing, selling, and supporting clients in implementing PropTech solutions to their built environment. Interesting part is that it was amidst a global COVID pandemic, so the way people work had been changing rapidly. A lot of remote work, hybrid workspace solution, but also care for health and safety and user well-being was among the top priorities for our clients. And next, I decided that I want to go back to the venture capital sector and use what I have learned through this journey with corporate, startup, and different VC funds to help to join the team of well-established entrepreneurs and investors, and then build our own fund here for the region. So that's my journey in a nutshell.
Perfect. Only a couple more questions from me before I hand over to Simon, who I'm sure has plenty of questions for you. Can we zoom out and just have a very quick look at the investment landscape today, just to give some context to our listeners? What are you seeing, Mike, and what are you expecting to see maybe in the next 2 to 3 years in terms of investment?
Yeah, so maybe to give a bit more flavor in terms of the volume and the market size at the moment, that is for 2023, the PropTech market size was valued approximately at 30 billion euro globally. So this is a significant chunk of economy and sector, industry-wise. And the compounded annual growth rate, so CAGR, is estimated at around 50%. So that's how fast the market will be growing to reach around 100 billion US dollars by 2032. So we're speaking about a market which is already quite significant and is yet going to expand really at an important growth rate. For the trends that I see, as Simon also mentioned at the beginning of our meeting here, of course, we cannot speak about trends without AI. So that's PropTech and real estate sector is also prone to being expanded through implementation of AI technologies. But one important point that I want to mention here is the aspect of data aggregation. Because, well, AI is as good as the data we train it on. So data aggregation in the real estate sector it might be one of the challenges, but also very important aspects for implementing the PropTech solutions. Because what I've seen, many clients and sectors are struggling with overcoming so-called data silos. So to be able to extract the data and integrate it into a coherent database. So in terms of AI implementation, that's an important aspect that I'm seeing is going to get more and more traction. Another important point on intersection of technologies and human, which was always about the user experience and how well technology can help, for example, interact with the building through different kind of access control or central maintenance capability systems. The important part here is integration with IoT, so Internet of Things and hardware. And this partly stems from the fact that AI is making writing software more and more accessible and easy to do. So the real value creation will come partly through the implementation and the intersection of the software and hardware, the virtual and the real world, especially in the real estate sector. So I can see more companies and investors focusing on that intersection where we can see software solution being deployed at particular building and hardware ecosystem. And maybe the third final one, of course, sustainability and ESG reporting is still an important aspect as it was in the last few years. And I can see also here in Southeast Asia, countries like Singapore or Hong Kong and Australia already introduced ESG reporting requirements for the companies, and especially multinational corporates are going to introduce and require those from the buildings and the landlords and providers that they are going to work with.
Okay, before
Perfect.
I've
Great
got
stuff.
a couple of things I want to jump into here. I think it's a good segue. Now, as a point of disclosure, I'm working with Mike on setting up this fund because I think it's such a great opportunity. But Mike, as we've talked many times, why set up a fund in Southeast Asia? What is it about that market that you think is super attractive? Actually, take a step back. Tell us, what is the fund that's being set up and what's the objective of the fund? What sort of companies are we looking to invest in, etc.?
Yes, so the fund is going to invest at early stage, that is seed and pre-series A startups that develop real estate technologies in Southeast Asia and Australia. So the objective of the fund is to support entrepreneurs at a relatively early stage of their growth, but such companies that already have some initial traction and want to expand and grow initially in their home market, but most importantly, abroad. And the fund that we are setting up, PropTech Farm, is part of a global VC network of PropTech Farm established out of Sweden, but investing in Europe and Asia. And the value creation opportunity here is to help connect those regions and exchange know-how and expertise between different markets and help companies from Southeast Asia and Australia grow beyond the APAC region to Europe and possibly other markets as well.
Okay, what sort of companies are you looking at? I mean, you talked about companies having a bit of traction and so on, but what would be the ideal candidate for an investment?
Yes, so the ideal candidate would be a company at late seed or pre-series stage. That means the company that already have their first clients, that the product, that the company which already had found their product market fit, meaning they are able to generate revenues and significant commercial revenues, meaning not only from pilots or test clients, but a contract with a commercial client who is recurring and using the solution. So we'll be also looking at the product itself, and it should have a significant aspect of technology in it, meaning we are not looking for service-based solutions or only manufacturing companies. We are looking for companies where the core value proposition comes from an interesting use case of a technology. Very often we see, especially in these days, utilization of AI technologies, for example, to help visualize interiors of a buildings or to help with virtual walkthroughs. That's on a marketing side for real estate sector, the kind of companies that we might be looking at. And also the other solutions, like I mentioned, which help to overcome the software hardware boundaries and can connect to IoT to help better understand what's going on in the building, so in the building environment, and help manage this environment.
Okay, so if I guess there's two things. If a company is interested in seeking investment, they can reach out and contact you. How should they do that, by the way?
Yeah, so the best way is to just drop me a line at mike@proptechfarm.com, or you can also visit our website, proptechfarm.com, and then you will find more information about our fund, and there is a contact form there as well. So please feel free to reach out. I've got also a LinkedIn profile at Mike Plichta, so there's a couple of...
And I guess if someone wants to invest in the fund, because the fund is in the process of being launched, it's a Singapore fund, for those who are interested in knowing more details. This is a proper managed fund?
Yes, so this is a fund which is established under Singaporean VCC structure, so under MAS regulation, which are among the top and strictest in the world. So we are happy to work with MAS and the local partners on establishing the fund. And it's domiciled in Singapore, but with a ticket to invest across Southeast Asia and Australia.
Okay, and I guess they can reach you also, Mike, at PropTech Farm if they want to understand more on how they can invest into the fund and leverage the experience of yourself, myself, and our colleagues who have got, I think combined we worked out well over 100 years experience in the PropTech industry. Now, when you take a step back and look at some of the major trends, and you talked before about everything from sort of clean tech and how that relates to PropTech and so on, where do you see the real big opportunities emerging?
Yes, so the big opportunities are around commercial real estate, which is especially growing in Asia. I can see a lot of landlords looking at examples and solutions from Western Europe or the US, where the smart building technologies are already widely deployed. And this theme and trend is coming to Asia, both with landlords themselves, imported by landlords themselves, or through tenants, that is multinational corporations, which require the same kind of standard that they see in other markets. With smart building technologies comes connectivity and digitization of the entire built environment. So understanding how people interact with building, that's very important and important part, which also has a lot of growth potential. And here, of course, utilization of AI to really gather this information, draw conclusions, and predict, for example, in predictive maintenance or automatic valuation models, predict how the building is going to behave in the future. That's also another important part. For Southeast Asia and Asia itself, growing prices of energy are also a driver for looking to cost optimization solutions. So, for example, energy optimization systems, building management system that can automatically change behavior of the building depending on the expected occupancy, weather, or anything that's going on in the area of the buildings are also kind of solutions that I can see a lot of interest and clients might be looking for. However, we still need to remember that every technology and this kind of implementation will be looked at from ROI perspective. So having been speaking with clients like landlords or tenants who look at implementation of this technology, they are also very aware of the financial aspects, and they are gauging what is the return versus required investment. So this is something that many companies need to have top of their mind, to always speak and have this value proposition in financial terms clearly visible when speaking with clients.
So when you, because I think it's interesting to explore why startups succeed and why startups fail. What would be the top 2 or 3 reasons that a startup succeeds, and conversely, why do they fail? And I think then sort of combined with those two, what is it that this fund is going to do to help anyone who seeks investment succeed and not make the mistakes that the failures make? So what are the top sort of, let's start with why people fail. What is it they do wrong? And then what do they do right? And then what are you going to do to help?
Yeah, so in terms of failure reasons, there are a number of those. And unfortunately, as our listeners might be well aware, the failure rate is much higher in the startup ecosystem than in major economies. So it's at seed stage, it's estimated that anywhere between 70 to 90%, depending on how you measure it at what stage, but it is very significant. And maybe let me give you the 3 top reasons that I've seen across working with startups in different ecosystems. So First and foremost is lack of commercial traction, meaning the founders, especially at early stage, focus on working on the product and technology. Very often, well, as those are tech startups and tech companies, we have founders who are of tech background, and they focus on the programming and coding rather than gathering market traction, feedback from the client, and working on the pilots. So I can see this as the very top reason for startup failures, where they put too little attention for market feedback and finding the product market fit with an actual client. And they spend too much time and resources on working on the product, which at the end might turn out that does not meet clients' expectations. Second reason, which is also very common across many different startups, are issues among founders. So we can see that this founder separation or founder's dilemma is something that roughly 50% of startup needs to go through. And many of them succeed and are able to restructure the team and work from their own, but many of them do not. So in this situation, especially at earlier stage, they cannot overcome this difficulty. And the third reason is for startups when they reach a certain commercial point, estimated roughly at around 200,000 euro, more or less, depending on the markets, they are unable to grow beyond that because it takes significant changes in the way you do business, in the way you scale up and work on operational matters, and also including your own human resources, how you manage your team to grow beyond the point of early stage and small enterprise. So I can see also startups struggling to do that. And if they are in this, let's call it limbo for too long of a time, then they might run out of cash if they are not profitable. And investors who do not see fast growth rate are unwilling to invest in such a startup. So if they at some point in time stop their rapid growth rate, they might also hit fundraising issues.
Okay, so then conversely, are the reasons they succeed literally the opposite of those reasons, or is there something unique about a company that, you know, when they're successful, that you see?
Yeah, so those would be the opposite of what we've just discussed in terms of the failure reasons, especially in terms of go-to-market strategy. When a company has well-developed go-to-market, speaks with clients, develops the product with the client, gathers constant market feedback, then it's much easier for the company to develop and to growth, and then it provides this provides them with a lot of growth opportunity and potentially allows them to be the successful company in the future. One important aspect on the positive sides to add is also the proper market. Meaning, if you are in a good market, when the market is growing, it's much easier for the startup and for the company to develop and to get the necessary traction and investors' interest.
Okay, so one of the things that in my experience that really helps a startup be successful is having the right support network around them. We do at Fusion for Ventures, we're doing a fair bit of work at the moment, not at the startup stage, but with companies that have been around, say, 5 to 10 years. And we're helping them scale their business. And to do so, what there's a common theme amongst each one we're helping is that the people running the business are almost isolated. They have not necessarily built a strong network around them of people who've walked in their shoes before and in the same industry and can help them navigate this next part of growth. And I think one of the characteristics of a very good founder who does succeed is that they realize that there are a lot of things they don't know, and they're not shy about seeking them out. In fact, one of the best, in case he's listening, founder that I came across is a guy called Brian Reckwath, who created Beaver Real, which merged with Grupo Zap and then sold to OLX for, I don't know, $600-800 million about 5 years ago now. And what Brian did in the early days, and I'm going back to 2010, 11 and 12, is he aggressively sought out people to work with. I first of all invest in his business and then become advisors to him who had sort of done the same thing before. And then he asked so many questions that your head would spin. And what he did was, there's this expression, I never learned anything by talking. He was very good at just shutting up and listening. So he would ask you a question, and then he would just listen and take copious notes. He'd drill in on some points that he felt were very relevant for his business. And in that whole process, he was able to go from literally nowhere in the market to become equal to the market leader, merge, operate the market leader, because they were the guy had come from nowhere here, so they were the guys on the rocket ship. Merge, operate, and then sell to OLX. So I think that one of the interesting lessons out of this is building the right network around you, and that's a fundamental combination of getting the right investors and the right advisors. And I'm working with one company at the moment, and they've got a cap table, share table of a combination of just financial investors. Two or three of them are coming out of a mining industry who they had some money, but they know nothing about the PropTech space. And the problem is that those sort of investors get nervous when things aren't necessarily going to plan. So I think working with people such as yourself and the PropTech fund is very important, because you're getting not only access to money, but you're getting access to the people behind the fund who have got, as I said, 100 plus years experience working. So I think that's an important point for any startup trying to grow.
Yes, definitely, and it helps to overcome some of the issues I mentioned as well in terms of market support, growth support, whereas proper advice can help you. And first of all, it can help open doors when you speak with potential clients. So when there is an advisory board who's been, for example, doing business with potential clients, it's always an easier sell when you have a hot lead that can help you reach a specific person or decision-making person in the corporate client environment. And then in terms of operational aspects, experienced advisors also had been doing this for many, many years. And people in our team with, like Simon mentioned, 100 years of experience combined. That's the experience of growing businesses, growing companies from a few or several workers to a few hundreds of those. So that's also an important part of a startup journey to grow the organization. And when someone can share the best practices and their story, that's always super helpful.
A quick question from me, Mike. Sorry to jump in there, Simon. You told me earlier this year that you were planning on signing checks between 500,000 and 1 million USD. So these are fairly sizable checks. I guess the question I have is, when you're signing those checks, how much of an expectation do you have on where that money is going to go? And how adept are these founders and entrepreneurs at spending funds wisely on the right things at the right time? I sort of want to dive into that topic a little bit before we go back.
Yes. So first of all, those are the kind of checks that we are writing to companies that already generate revenues. So those are not just idea stage or pre-seed startups. Those are startups that already generate several dozen thousands a month at least, or more. So they can also show us their traction and historical financial reports, and we see how and what they have used the previous funds for. To answer your question, what are the typical use of proceeds? So there are two main categories. One, the most important, is the product is business development strategy. So how the company is going to double down on their sales initiatives and generate more revenues and traction in the future. And the other, also very important, is the product development, meaning what kind of resources are necessary to further develop the product and potentially to increase its defensibility in the long run. So market expansion and product development are the most typical use of funds for this kind of investments.
And the follow-up question from me before I hand back over to Simon is that when I check the PropTech Farm website, the website says that 54% of the fund is being allocated towards smart cities and transactions. So I sort of want to get a sense of where you see the biggest opportunities in these spaces, and again, how maybe the funds that are coming from your investments are going to capitalize on those opportunities.
Yes, so in terms of target allocation, we try to treat it in a more flexible manner. So maybe that was like a kind of historical results that were achieved, because we are looking at technologies for real estate in a broad sense and want to monetize and build on those areas and sectors that will provide most value to the market and consequently to our investors. So in terms of smart cities and transactional and marketplaces, those are broad spectrum of sub-industries, whereas a smart city encompasses both smart building, energy optimization and management, micromobility, and user experience solutions. So those the kind of subsectors that we covered previously. And for transactional platforms, those are very important for us as well, as we can see a lot of friction that can be covered through implementation of technology solutions, especially utilizing AI, for example, with helping closing deals, help to agents provide their work in a more automated and effective manner. So those kind of solutions we are looking for in the given sectors.
So Mike, just to one other question, sort of slightly left field. There will be people listening to this who go, yeah, I like the idea of setting up a fund. Can't be that hard. Can you sort of give a bit of an overview of just how easy or hard it is to set up a fund, and what are the one or two key challenges?
Yes, so there are, well, we can divide this task of setting up a fund into two broad areas. One is the organizational aspect, which requires you selecting where you want the fund to be domiciled, who are going to be your fund management platform, who is going to supervise the fund. So for our case, we decided to settle on Singapore because it's widely recognized and globally recognized as a stable legal environment for multinational finance. And this is very important when you want your fund to be really transparent in terms of regulatory framework. So that's something you need to decide on, and then find the proper partners and adhere to regulatory requirements. Like in case of Singapore, might be quite strict, but well, that's a part of the business. And the other important aspect is of setting up a fund is fundraising itself. So speaking with investors and providing them with your investment thesis and historical track record, expected financial or investment allocation, and then expected returns. So you need to have all of those aspects well covered and presented in a coherent thesis and investment deck when speaking to your potential future LPs, that is limited partners, investors.
Okay, so I think we should wrap up here, but I think the couple of key things I take away from this one is if being a startup, there's a lot of really interesting trends coming along in the PropTech industry. B, if you're a startup in the Southeast Asian, Australian, New Zealand type markets, then I think it's be absolutely worth chatting to Mike and the team at the PropTech Farm Fund 3. This is the third fund of the business, and it's very much focused on those markets. And if you have a great business, a great proposition, you'll get access to not only funding but also to a great team who with lots of experience. And I think that's one of the things that is more valuable than money itself. And I think the third thing is that if you like the PropTech space and you want to invest but don't really know where, then reach out to us, because reach out to us at Mike at PropTechFarm.com, and we can talk to you about investing into the fund. I mean, the fund is about a third full at the moment, and we've got an October closing date. So here's your opportunity now to invest into super interesting PropTech businesses within the Southeast Asian and Australian, New Zealand markets. There's already 2 or 3 businesses lined up for investment, and I think you can't go. You really will. You could do a lot worse than actually invest in people who've been there, done that, know what they're doing, and getting them to do the heavy lifting in generating value by investing into the fund. So, Mike, thank you very much for taking the time to chat. I think it's always interesting to talk to people who are on the other side of the coin, i.e. the funding side, about what they're looking at, what they're excited about. I think we'll do, probably Mike is chat to you again, probably 4, 5, 6 months about what additional trends you're seeing and how, the market continues to evolve. Because it's always evolving out there. That's the one thing I've learned after 25 years in this industry, is that where we were back in, basically 1999, 2000, where we are today is fundamentally different. And AI and technology-driven transactions, etc., were just not even contemplated back in those days. So I think over the next 3 to 5 years, you'll be investing in a lot of super interesting things, and the trends will keep coming. So thank you very much for taking the time to chat today. I think it's great what you're trying to achieve, and I'm glad I'm part of working with you on it, because I do fundamentally believe that investing in the new generation is absolutely the best way to give back to an industry that I've thoroughly enjoyed for the last quarter of a century, which makes me absolutely scared saying quarter of a century, but it's a quarter of a century. So
likewise,
thanks, Mike.
Thank you, Simon. Maybe just one additional note in terms of why it's also a good time to assess such an investment, because we are at the high interest rates environment, which makes some investors more cautious and risk averse. However, at the same time, the valuations of the companies that are at lower stages that they had been a few years ago. So there is an opportunity to find really interesting businesses at attractive valuations, and once the macroeconomic environment rebounds, already take part in the significant growth of the assets. So that's also time-wise a good time to be investing in this asset class. And thank you, Simon. Thank you, Harvey, for the invitation. And it's been great speaking with you guys. I look forward to the next opportunity.
No, absolutely. And it's a pleasure having you, Mike. And again, likewise, we look forward to speaking to you again in a few months' time, and we'll see where we are in terms of that fund. So until the next episode, it's thank you from Simon Baker.
Thanks.
It's goodbye from Mike Plichta.
Thank you and goodbye.
And it's goodbye from me. Catch you later, guys. Bye-bye.
That's from the Ronnies. I'm sure it is. The Two Ronnies.
It
It's
is. It
goodbye from him
is.
and it's
You're
goodbye
up
from
on
him.
your pop culture. I love it. Right.
It's my era.
My dad made me watch those shows every day. I
you make
grew
me
up with
feel
those
like-
fork handles stuff. Right then. Thanks
Thanks,
very
all.
much for watching, guys. Bye-bye.
Thanks. Bye.